Hey traders, Michael or 𝐼𝐴 here for another episode of Common Sense Market Analysis. Today is Turnaround Tuesday, December 9th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, you're going to want to stick around for this video because we got a lot of stuff to talk about. Even though we're only down 0.09%, 59 cents, pretty much a flat day today, we had some important price action intraday today that's going to help formulate some puzzle pieces of what to potentially expect coming up towards tomorrow. Tomorrow is Khabuki Day, aka Fed Day, and then potentially what to expect later on this week. So looking at this thing at face value, really, there's no change on the chart. We're only down 0.09% today, pretty much a nothing day, but there was still some key things that happen intraday. So what we're going to cover first is that trend line that we've been talking about for a while now. It goes from the high of November 3rd to this pivot high November 12th. We'll extend this line out, and as you can see, just looking at it on a daily time frame, we're closing right on it. But then, going over to a 15-minute time frame, price was certainly attracted to that trend line at the beginning of the morning and then at the end of the day. So if we scroll in a bit, and we'll put a vertical line right here, to the right of the vertical line represents today's activity, so this is the first candle of the day, and take a little look at where the low was. It was exactly on that trend line, literally nailing it on the frickin' dot. And then at the end of the day, where did we go right back to? None other than the trend line. Mrs. Market certainly knows about that trend line. If you don't know about that trend line, I would get to know it. And we'll give it a funny how that works, that right before the Fed meeting tomorrow, we're hanging around that trend line, literally right on it. So we're at an extremely critical spot within the market right now. We've been saying closing candles above that trend line and continuing to use it as support on the way back down is the bull case scenario. And as of today, just looking at the intraday activity, again, to the right of the vertical line is today's activity, we never closed candles below it. We touched it 2 times, once in the morning, once in the afternoon, but always closed candles above. That is the bull case scenario. For now. One more thing that I do want to mention before we get into some other stuff is just looking at this area right here, it's pretty much the formation of a rising wedge pattern, continuously making new higher lows. And with that information, we can even create another trend line, one that looks a little something like this. Remember, we don't draw the trend lines, the market draws it for us. And there's other trend lines that you could have on the chart. These aren't the only 2 that you could create, but these are the 2 that I've seen show the most importance from the bigger picture perspective, as well as the intraday activity. So having these 2 trend lines on the chart, we can see right here at the precipice, the apex of the triangle, whatever you want to call it, doesn't really matter. It's just where the 2 trend lines meet. And as you can see, that was pretty much today, and we closed literally right on it. We're at the most important time period within this rising wedge pattern formation, and it just so happens this is leading up right into Fed Day tomorrow. So we couldn't be in a more important spot. As of right now, anything can go with the Fed. The Fed is expected to lower interest rates tomorrow. Last time I checked, it was almost a 90% expectation that we're going to lower interest rates. But even so, just looking at this in a technical analysis perspective, we're in a neutral position right now as we're closing pretty much right on the 2 trend lines. And with the announcement tomorrow, it's pretty much a coin flip. It could go either way. Whatever the outcome is going to be tomorrow, it's going to be what it's going to be. I can't sit here and talk to you guys and say, yeah, we're going to go up because we're lowering interest rates tomorrow. This data, this, that, the other analytics says that we're going up. Because in reality, and where we stand in a technical analysis perspective, we're in a pretty neutral position in which the market can really go in either direction. And whatever happens tomorrow is going to happen. But, capital B-U-T, we can be prepared with important targets and destinations and some line in the sand numbers that we can be aware about, all from a technical analysis perspective, because all charts act and react the same way. Markets love to repeat itself, which is why we see the same things over and over again. So getting some different perspectives and going to different time frames, such as the 4-hour chart, and we could go ahead and remove these lines. We'll get back to that if we need it. But what I see right now on the 4-hour chart is an inside bar pattern that's been forming since yesterday, the beginning of the week. So what do you got? You got this big move down, and then you have some consolidation within this breakdown candle. And as we always say, the high of this breakdown candle is going to be some bona fide overhead resistance. And right now, this number can be our line in the sand number. The exact high is 686.64. So 1 penny off, can't split hairs over pennies, But if we do start to get above and close candles above on a 4-hour time frame, remember, the larger the time frame is, the more dominant it's going to be. If we start to close candles above, then we could be in a position for another move higher, potentially to take out the previous all-time high. And where exactly would that put us? Well, because markets like to do the same thing over and over again, because all charts act and react the same way, we can expect a move that's going to be pretty symmetrical to this breakdown candle, the candle that created the inside bar pattern. And if we do close candles above, and we do have a symmetrical move towards the upside, it will land us somewhere between 691 give or take. Remember, it's not going to be perfect. We're not in search of perfect. This is part art form, part science, but it's going to be within this vicinity, give or take. And that will definitely put us above the previous all-time high. Here's a perfect example that happened last week. So let's go ahead and remove this, and we could see this candle right here, big move up, creating a breakup candle, and then we had some consolidation within this breakup candle. Here we have 1 candle, 2 candle, 3 candle, and remember, we're still on the 4-hour time frame, trading within this candle, creating the inside bar pattern, just like what we have going on right here. The only difference is this is a breakdown candle versus a breakup candle. And then take a look at what happened. Once we started to close candles above the high of this candle right here, that breaks the inside bar pattern, and then we could expect a similar move towards the upside. And that puts you somewhere in this vicinity. And what do you know? We did find overhead resistance near that area. Again, the market isn't perfect. We're not perfect. We're not in search of perfect. But we utilize all the tools in our toolbox to put the odds in our favor. By the way, this is all taught plus way more within the MSF Master Class, with real live examples. So going back to the most recent inside bar pattern situation that we have, closing above this high is going to be the tell. It's the line in the sand that we have another move higher. But on the flip side, if we start to close below the low, as you can see, we did spike the low, but never closed candles below it. And what we could also do is draw our trend line, extend this out to the right, and as we can see, that's in a very similar vicinity compared to that number that comes in at 682.20. So getting below that will open the door to another leg lower. Where exactly in the vicinity would that leg lower be? Well, it would be right around the vicinity of the entrance to no man's land. Remember, it's not exact, but we could call this around the vicinity, near 677.60 give or take. Right here, this red line represents the entrance to no man's land, and generally speaking, that is a bull-bear battle. It's one of those spike the lows and rip it right back up opportunities. So we could get some action near this area right here. It is a bull-bear battle, but we don't have to just stop there just yet. Hypothetically speaking, if we do start to close candles below this low, the entrance to no man's land, then we have a very important gap down below that we were talking about for a while now at 675. That is a very important destination. And if you remember correctly, I did say that this is going to be a place where the market is going to want to pay a visit to. It didn't have to be the next day or that following week of when I said it, but sooner or later that is an area that we need to visit. And depending on how we treat all of these numbers, in which you should definitely have these numbers down on a sticky note, will determine if we get there. So just to wrap up a few things within the spiders, whatever is going to happen with the Fed tomorrow is going to happen. In reality, it's going to go one of two ways. It's going to go up or it's going to go down. There's no real way to tell where it's going to go. But what we do have that not a lot of traders have is key important levels that actually work. So tomorrow we're going to keep an eye out for all of those numbers and see where we want to close above or below, and especially at the end of the day tomorrow. We could potentially have a double top on our hands. There's no way to tell just yet, but after the Fed, also where we close candles this week can give us some more puzzle piece information. Real quick, let's go take a look at Camp IWM, my #1 favorite market leading indicator. We're up 0.21%, and we're pretty much just toying around / eating time off the clock of the previous all-time high. We came up a few cents short last Thursday, few cents short on Friday. Yesterday hit it right on the dot, and then today spiked it by a few pennies, but still cannot get above it and close candles above. So as of right now, we're not strong enough to take out the previous all-time high and continue to push up higher. Things might change with the Fed day tomorrow. We're just going to have to wait and see. But one other thing that I do see that catches my eye in Camp IWM, and this isn't going to be perfect, but it's kind of just the idea of it and trying to put together the puzzle pieces, but what I do see is a very ugly inverse head and shoulders pattern. And the reason why I say ugly is because usually we want to see symmetrical moves, and as you can see with an inverse head and shoulders pattern, right here you have the left shoulder, this big area right here, is the head, and then right here you do have a very small right shoulder. Normally, I would like to see it symmetrical towards the left one. So if we got down maybe to the 50 or the 20 period moving average, that would certainly help out the case. But again, we're not going to get absolute perfection within the market. And this is kind of just formulating ideas / putting the puzzle pieces together. But I do see somewhat of an inverse head and shoulders pattern. And we are closing candles above the neckline right now, which should produce another move higher, potentially taking out the previous all-time high. But as you can see, for the last few days or so, 1, 2, 3, 4 days of pretty much nailing the previous all-time high, but can't get above and close candles above, that's definitely some interesting information. Pairing it with the inverse head and shoulders pattern, in which we're already closing candles above. So the question is, why haven't we been able to reach new all-time highs in my #1 favorite market-leading indicator? Well, we don't know the exact reason. We're not going to know the exact reason. If you say that you know the exact reason, I'm going to call BS, because there could be a million different reasons why, as the market did that specific thing. And it's just going to be what fits best with your story. But this could be the result of something else brewing. Maybe a triple top situation. If the Fed does push us lower tomorrow or throughout the rest of the week, and we start to close candles below the neckline, then we could say that we're in a different position from where we are currently, and we could go ahead and see some more downside potential. Keep in mind that we are extended from home base, and the market doesn't like to be too extended from home base. This is just food for thought, trying to get some different perspectives as to what might happen leading up towards tomorrow and even the end of the week, but we're going to take it one day at a time and see what the market wants to do with Fed Day coming up tomorrow. Did we have any trades within Inside the Numbers and the live room today? That's a rhetorical question. Of course we did. Let's take a quick look at Inside the Numbers, starting with the 0 dark 30 notes. This is the morning game plan that's laid out to members well before the opening bell. And one of the first things that I wrote was that we came into one of our support numbers at 682.75, which also happens to fall in line with our trend line. And we already bounced right off of it and found support. So right here, we're taking a look at the extended hours. And in the pre-market, you can see that we did hit 682.75, so the thieves in the morning got to it first, and then towards the morning, right before the opening bell, we came right back into that number. Literally at 9:25, we spiked it by a little, and then went right back up. And take note, this black line represents the trend line. We didn't close candles one time below it. And then if we switch over to the regular session, to the right of this vertical line is today's activity, first candle of the day, just what we talked about before, found support right at the trend line, making 682.75 some unfinished business in which we came back into that number later. So that was the plan for the morning trade. As you can see at 9:16, what's the scoop for today? We were looking for a spike through 682.75 that could have been some normal garden variety behavior, but obviously we didn't get that opportunity. But as I say quite often, there's always another opportunity around the corner. Scrolling up, what do we got? At 9:38, the first overhead resistance number is 684.05. This is trader's choice. Next number up is at 684.90. This is an overhead resistance zone. As you can see, we have both numbers up on the board. First number, 684.05, right here, spiked it by just a touch, and then ripped it right back down, and made a low of almost a whole buck. So she definitely provided you the bare minimum base hit. A base hit is 50 to 70 SPY cents, or 5 to 7 ES points. And then what happened at the next number, 684.90? Pretty much nailed it right on the dot, and then came right back down. Where to? The 684.05 number. You can see the importance of these two numbers. And we had a ton of Inside the Numbers and live room members take this trade. How do you like them apples? At 9:42, we got a little bit of a jolt that helped us secure the base hit. Holding a trailer is fine, just don't let the remaining portion go bad on you. And then at 10:05, we did make it to the back end number. This is trader's choice. And then shortly after, literally a minute after, she's already providing you the base hit. 684.05 was a target towards the downside. Again, you can pause the video, read the notes, and go back to the chart to double check the work. Everything's in here for you: the morning game plan, the intraday updates, the afternoon write-up, everything that you need to be a successful and profitable trader. If you're done guessing and you want some real guidance for once, then you need to check out Inside the Numbers / the live room. If you purchase the live room, you get Inside the Numbers for free. What's going on with the folks over at the transportation department? We're down 0.49%, finding some resistance near the midpoint between these two resistance numbers that is creating this zone of overhead resistance. and we're on our way back to retesting 17,000, the front end number. So we can make our way back down and potentially use that number as support, which we've seen multiple times, or on the flip side, we could spike right on through it, start to close candles below, and then even utilize it as overhead resistance on the way back up. But really, there's no material change for the transportation department, still trading within this zone. The other side to the story is that we can go up higher and complete the back end number. But again, no real change for the transportation department. Same thing goes with the Q people. We're only up 0.12%. We still haven't gone to complete the unfinished business. That's this gap right here at 632.08. That can be possible with tomorrow's Fed day coming up. Go to complete the unfinished business, find some overhead resistance near or around this area, and then come back down. Also, we could form a little trend line right here. And as you can see, we have been finding some overhead resistance near this trend line and still managing to close candles below. Just looking at this on a 15-minute time frame, that certainly has been overhead resistance. And we're pretty much heading in right at it, eating time off the clock towards the end of the day. So tomorrow will be very, very interesting. If we could close candles above and go to complete that unfinished business, or continuing to close candles below for another leg lower. And finally breaking out of this rising wedge pattern. What about XLF? The financials, we're down 0.37% and still finding overhead resistance at that trend line. It's normal garden variety behavior that we spiked the trend line, retested these highs right here, in which we can't get above just yet, and then we're still coming right back down and closing candles below the trend line. The next destination is going to be right around this breakup candle low that happens to be around a majority of the moving averages. You got the 150 and 20 right in this vicinity. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. We're up 0.12% today, pretty much a nothing day, still hanging right around the vicinity of the previous all-time high. The all-time high comes right around 372.78. So again, with the Fed, anything can go. We can poke our heads above the all-time high, and it'll be interesting to see if we could close candles above or below, and then that could potentially give us some more information, whether this is going to be just another grind up, continuously making new all-time highs, or is this a double top situation? Every single day since this pivot low was created, we've been going up and up and up pretty much every single day. Besides this day right here, the 4th of December, where we were down 0.76%. But we're still in a position of just floating up higher with low volume in anticipation for the Fed. And anything can go with Khabuki Day tomorrow. And we're just going to leave it at that. Tomorrow we're going to get a whole laundry list of new information. Some more puzzle piece bits to help put together the bigger picture. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're pulling the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐴𝐴. Please don't forget to like, comment, subscribe on the video as it helps me and the channel out a lot. We'll be back ready to go in uniform for Khabuki Day tomorrow, and of course the video later that night. With that said, I hope each and every single one of you has a great rest of your day. Stay safe and take care now, folks.